PayPal stock is down 81% off its highs, and I'm going to make my case for why I think at current valuations, PayPal offers long-term investors a great risk versus reward. So let's take a look at this financial services company.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So like I highlighted, PayPal stock has taken a big decrease over the last couple of years, falling down by 80.52%, or if you round up 81% off the high. And there's been several reasons for this decline. Competition in the space is increasing, and people were spending less money online, where PayPal has the most formidable customer advantages. You can see that as economic reopening gained momentum in 2021 and 2022, that's when PayPal stock price took the biggest fall. However, I'm going to make my case for why I think now at current valuations, it's an excellent investment. In fact, I've had PayPal stock rated as one of my top stocks to buy here in 2024, and I'm reiterating that recommendation today. So let me upgrade that here on my list of stock recommendations. I update this list daily, and I share this list in my videos. Now, there is no access to the list outside of the videos, but I do share the list in typically every video that I make. So if you want access to the list, just watch the videos. That's how you can see my changes in these recommendations. So PayPal's revenue over the trailing 12 months has jumped up to 30 billion, and that's up from around 8 billion in 2015, as PayPal has accumulated over 400 million active accounts. And those declining active accounts for several quarters were causing the stock price to fall. Additionally, the competition that I mentioned earlier was the reason why PayPal was losing some active accounts, but they've turned that trend around, and they're now back to increasing active accounts. In the most recent quarter, active accounts increased instead of decreasing. What's more, recent trends are working in PayPal's favor. I've been talking about this away from home trend for the better part of 2 years now, and it looks like that's coming to an end. It looks like that trend has peaked. Recent consumer spending data I've looked at over the last 2 months or so are showing that consumers are tired of going out. Well, I shouldn't say tired of going out. What's really going on is consumers are tired of the price gouging when they leave their house. Seemingly everywhere you go, they've increased prices meaningfully from where they were a couple of years ago. So consumers are saying, I don't know if I want to do that anymore. I don't know if I want to pay several thousands of dollars to take my family to Walt Disney World. I don't know if I want to pay $100 to take my family out for burgers. I don't know if I want to do that anymore, when I could make that same meal at home for maybe less than $10. So those price increases have now turned customers off, and I'm starting to see flatlining or decreasing in some cases of those companies that are counting on consumers to get out of the house and spend money away from home. So with consumers returning to shopping online and staying home, that benefits PayPal. That's the trend that PayPal benefits most from. That's where PayPal has the advantage, because if you're shopping at a new website and they accept PayPal, it's so much more convenient to use PayPal than taking out your credit card and typing in all of that information, versus if you just have PayPal, you just hit login and pay, and it's just a couple of clicks instead of having to type in all of that information. And so that's where PayPal has an advantage. When you're away from home, there's really no reason to use PayPal unless you have the PayPal Rewards credit card, which does offer reasonable rewards competitively. But those, it's not a really prominent use case. The convenience advantage online is really what drives usage for PayPal. PayPal's profit margin has been volatile, but solid, right? In the double digits. It fluctuated all the way up closer to 20% at one point in 2018, and it fell as low as 14% at one point in 2022. But now it's back on the rise, up to 17% in the most recent trailing 12-month period. The new CEO came in, initiated some cost-cutting efforts, and that's likely going to drive up some profitability in the near term. And if you look at for the rest of the year, coming into 2024, PayPal had forecasted flat earnings per share for the year. But after the first quarter came in better than expected, the company upgraded their earnings per share forecast for 2024 to a mid to high single digit growth, right? So that's looking at growth from 6, 7, or 8% earnings per share growth for 2024. That's a big upgrade from flat. And it wouldn't surprise me if after the second quarter, they upgrade that earnings per share guidance again, given those customer trends I highlighted earlier. It is likely going to turn PayPal's second quarter into the higher end of their guidance. Just my speculation based on the macroeconomic trends I've noticed worldwide. Similar story with PayPal's cash flow from operations. It's been volatile, but it's been above double digits for the better part of the last decade, and more recently at 18.37%. Solid numbers. These are not remarkable numbers for a business to generate cash flow from operations to sales at 18% and operating profit margins in the double-digit percentage, but you're also not paying a premium valuation for PayPal stock. You're not paying a forward price to earnings of 30, 40, 50, or 60. In fact, you're paying a forward price to earnings of just 13. So a cheap valuation, which you rarely see for a company that's growing earnings per share at the rate that which PayPal is growing earnings per share, close to double digits. In a relatively asset-light business model, most of the capital investments in PayPal's business has been made years ago, and now it just needs to sustain and build this competitive advantage, which is a two-sided thing, right? The over 400 million active accounts is the network effect. That's a primary competitive advantage. It needs to build on that. Just continue building on that, and that will support PayPal's growth for a several year period. If it can just keep adding new merchants to accept PayPal, and that will make PayPal more attractive to customers because they know that more merchants are accepting PayPal, and the more merchants that accept PayPal will attract more customers. The more customers that use PayPal, the more merchants will want to accept PayPal, and it can just feed that positive virtuous cycle for several years into the future. So they've really got to focus on that core, build those advantages, and going forward, that should support growth for PayPal. So for all those reasons, I like PayPal's business model. I like the valuation. And so for that reason, I've placed PayPal stock as one of my top stocks to buy right now. And I reiterated that recommendation here today in this video. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.